parties is something that's relevant to all charity accounts. So if you're doing cash or if you're doing accrual accounts, it's relevant. There's 4 key reasons why it's important to charities and to get to grips with it. It's relevant to all charities. It shows transparency and accountability. Depending on your size, it is recommended or required by the Charity Commission, and it is likely that your charity, it's helpful that it's about managing conflicts of interest, and it helps you to think through the conflicts of interest. Lots of churches and charity trustees find this area quite confusing on the accounts, and it's really important to get to grips with this so that we can increase trust in charities. So let's look at the definition of a related party. And this is the SORP definition of a related party. So the related party is a person or entity that is in control or has significant influence over the charity, or vice versa. So typically we'd be looking at the trustees of the charity who make the main decisions. I've got an interactive question for you. You're just going to have a think about what related party transactions are and what might need to be disclosed. So we've got 3 different scenarios, and if you can put it in the box yes or no. The first is a grant payment of £5,000 from one charity to another that has joint trustees. Does that need to be, is that a related party transaction, and does it need to be disclosed in a set of accrual accounts? The second is a close family member of a trustee is employed by the charity, earning around a salary of £30,000 a year. Is that a related party transaction, and does it need to be disclosed? And finally, a routine travel expenses incurred during the year by a senior manager or leader who is not a trustee. And again, is that a related party transaction? Does that need to be disclosed in accrual account? Most people have got those answers right. That if you have a grant payment of £5,000 to a charity that's from one charity to another with a joint trustee, the joint trusteeship is a related party transaction. Fantastic. And then also a close family member who's employed by the charity, because they're a close family member, that is a related party transaction, and that would need to be disclosed in accrual accounts. And you've said yes, routine expenses by a senior manager or a leader wouldn't need to be disclosed unless they are a trustee or they have that significant influence over the charity. We're just going to cover what are related party transactions. So we have kind of looked at the definition, but to break that down a little bit more, trustees and key management personnel are included in related parties. Also close family members of trustees or key management personnel. Any other businesses or organisations that are controlled also by the trustees or the key management personnel, or their close family members. So if a close family member was a trustee of another charity, again, that would still be included as a related party. And we cover all the transactions that would relate between those parties. So donations, remuneration to trustees, sales of goods and purchases and services, etc. So all the transactions that go between these related parties will be disclosed. This is a really interesting question to see what people think, as we find quite a mixture of understanding about this. Are disclosure requirements for related party transactions the same in cash accounting, receipts and payments accounting, or and also accrual accounting, which is under the SORP or the Statement of Recommended Practice? Let's see what you say. You're saying yes, you are required to disclose in both receipts and payments and accrual accounting. So let's have a look. Or there's a few it depends, which is great. because it depends is the answer to most of our questions. Brilliant. What is required under the different accounting ways of accounting? So what we've said is that it is required in SORP and accrual accounting. So if you're accounting under the statement of recommended practice, you must disclose related party transactions. That is a must. There is a small exemption to that. If you are if it's a related party transaction and you're naming the related party and they are under personal danger, if that is in the accounts, then that is an exception that you can be made where you can admit the name of the related party. So it is very clear in accrual accounting that the related party disclosures have to be included. In cash accounting, however, the Charity Commission say that yes, it should be added, and the Charity Commission recommend this as best practice to enhance transparency. So certainly when we provide cash accounting, we would encourage people to look at related party transactions and include them in their cash accounts. So what is the related party transaction disclosure that is in the accounts? Basically, the disclosure says who the related party is, the nature of the relationship, a description of the transaction that's happened, the amounts involved, and if there is anything owing at the year end, if there's any outstanding balances. Now, you may not have any related party transactions in the year, but you do need to disclose to say that there were no related party transactions in the year, so that they don't think that you've just admitted it from the accounts, but there's that declaration that there wasn't any related party transactions. This is really a key area because it's an area where in charity accounting it's been misunderstood and historically it's not been done well. In August 2019, the Charity Commission did some research and it showed that a significant number of charities didn't disclose their related party transactions in their accounts appropriately. And the Charity Commission are trying to encourage and keep an eye on who is disclosing related party transactions, and that we as a charity sector are improving our practice in this area. So getting to grips with how should related party transactions be handled in a charity on a day-to-day basis. They've got 3 key points here, that it's not just about the year end, but we would really encourage you to get a conflict of interest policy in place. Make sure that all your board are aware of what related parties there are, what the conflicts that they have on the board, and be aware of this throughout the year and not just something that you pick up at the year end when you're doing your annual accounts.